Hello everybody, welcome to a new video. Today I'm going to show you how to trade FTRs and what they are and how you can make a lot of money trading this. Okay, so many of you ask me to explain you what is it and how can you trade it. So this is something that I use a lot in my trading, my strategy. So let's go. In this video, I'm gonna divide it in two. First, I'm gonna show you and explain you what is FTR and the basic rules and what to look for. And on the second part, we're gonna jump into the charts and we're gonna see some examples. Okay, guys? So let's go. And before we continue, if you like and if you find some valuable information, I would appreciate if you subscribe, and share to someone that maybe you think it would gonna help. Okay, so let's go. So what are FTRs? Basically, FTR means failure to return. What does that mean? Okay, usually price is gonna be trending and you will see an opposing candle closing in the opposite direction. Like here in this diagram, we can see a bullish candle, then a bearish candle, and then a bullish candle. That means that the bearish candle, that is the FTR. And it means it's failing to return. Why? Because many traders were caught in this candle thinking that price was gonna reverse. Okay, so basically this candle created a lot of liquidity. Okay, this pattern is a candle formation of three candles, and it's gonna create a zone of liquidity. Let's go to the next example. Okay, I'm gonna show you the basic rules. So basically, you first need to have momentum. Okay, you need price to be trending either bullish or bearish. This is gonna be a continuation pattern and it is very, very effective. Okay, so once you see it and you know how to trade it, this is very, very good profitable pattern. And usually these are zones of liquidity in which banks and institutions look up to. Okay, and basically it's like little traps in which traders get caught into, and there's a lot of stop losses hit. Okay, and that's why it continue pushing the price into that direction. So for a bullish FTR, we need a bullish candle, then a bearish candle, which it needs to be smaller, okay, than the previous and the other candle. And for the bearish, we need a bearish candle, then a smaller bullish candle, which is the FTR, and then another bearish candle, okay? And basically, there's gonna be two ways to trade it, and I'm gonna explain to you in a little bit. Let me show you some examples here in this diagram, okay? So basically, this is a bearish FTRs, as you can see in the with the arrows. Okay, we have a bearish trend. Okay, price is pushing down. We have in the first one we have a bearish candle. Okay, it's breaking the consolidation. Then we have this bullish small candle, and then another bearish one. And as you can see, price continued pushing down, and then we had another one, and then a smaller bullish candle, and then the continuation, okay, of the price pushing down. Basically, you can trade it as the second bearish candle closes, the one that closes after the FTR. You know price is going to continue pushing down. And another way, a little bit more risky or advanced, it would be entering right at the bullish candle closing. Why? Because you know price is in momentum, and basically this is like a little trap for traders who think that price is going to continue going up, but instead it's going to continue going down. Okay, so there's the two ways. Actually, there's another way, which would be at the break of the FTR candle. Okay, that's kind of like a intermediate way to trade it, because you're basically entering with the momentum. Okay, I'm going to show you the bullish FTR. And by the way, this pattern works in every time frame. Okay, like 5 minute, 15, 30, 1 hour, 4 hour, daily. Okay, of course, as you know, in the higher time frames it works best because there's less noise, and patterns and candles are a little bit more reliable, of course. Okay, and in this example we have again a bullish trend happening, higher highs, higher lows. Okay, and in the first arrow we can see a bullish candle. Then we have a bearish candle, which is smaller, and it's basically inside the previous bullish candle. And then the next candle was a bullish candle, and it continued rallying. Then we had another one, okay, a bullish candle, then a bearish, and then a bullish. I would say it is best if the FTR candle, the wick, is smaller than the body. Okay, because that means that there's not gonna be any rejection, and it's gonna be best. Okay, it's gonna be a better quality kind of FTR. And another rule I would say is to, like, you gotta check your levels and zones. Okay, because you don't want to trade it against a nearby zone, otherwise it's not gonna be an FTR. Okay, it's gonna be a reversal candle, so you gotta watch out. And so recapping, we need a trend. Okay, it's gonna be trending, bullish or bearish, and we need the three candles for bullish candle, then bearish, then bullish. Okay, and the FTR has to be preferably like smaller. Okay, then now we can go and see some examples. Okay guys, so here we are in GBP USD. This is a pair I like a lot to trade because it gives a good amount of pips, it moves pretty good and easy, and it's very nice. Like, market structure is clean and easy. Okay, this was 1 hour, and as you can see we have a trend happening. Okay, it's going down, we're having lower lows and lower highs. Okay, as you can see, and here we have a bearish candle, bullish candle, bearish. Okay, and this was a really good trade. I actually took this one, and it went down about to the next zone. You could have targeted the low of these wicks. It was 40 pips. Okay, and this happened in the NY session, and then continuation. Okay, continue. As you can see here, we have a bullish FTR, but why we didn't take this one? Because we are in a downtrend. Okay, market structure is telling us that price is going down, so you wouldn't want to take this one. Okay, and it continued. We had a bearish candle, this small bullish candle, and then another bearish one. You could have taken it. It had the wick. It was a little, I mean, it is bigger than the body, so it was not a good quality kind of FTR. But since I mean, it's more like a doji candle, and it still would have worked. So this was pretty good too. Like, you could have taken the low. Okay, and if you're a scalper like me, like, you could have easily like targeted, like, your first TP could have been like 10-15 pips, and it dropped even like 70 pips, so it's pretty cool. And actually we had another one. Take a look at that. We had bearish candle. Let me take this arrow. Okay, bearish, bullish, bullish, I mean doji, and bullish. This also counts as an FTR. Why? Because we are inside of the bearish candle. Okay, as you can see, I'm gonna draw this rectangle. Okay, and they were inside. Then what happened? that we had this bearish candle closing. That's good quality FTR. So we have 1, 2, 3 candles inside. It still works, and it dropped also like about 40, 45 pips. Easy. Okay, let's go to another example. In this example, price is trending up clearly. Okay, higher highs, higher lows, higher highs. Okay, and we have this bullish candle, then this FTR candle, and another bullish candle closing. Okay, and maybe it didn't continue like pushing straight up like right after that, like we had a retracement. But in the next video I'm going to talk about FTBs, okay, which is another way to take advantage of the FTRs, which is basically a retest of the FTRs, because once we have an FTR, it's gonna create this a zone, okay, and price is gonna come back to it and push back up. As I said, FTRs are basically a zone, okay, it's creating a liquidity zone for price to continue pushing up. So in this case, we had the FTR and then price continued pushing up. How could we could have traded it in two ways? One was on the stop, like a buy stop here, like right at the break of the FTR, because we know like price is in momentum, and if it breaks the high, like we know like price is gonna continue pushing up. So it did, and it went up like 30 pips, so it, like for a scalper, like it's perfect. Okay, and let's say you missed this entry, you could have taken the close, okay, of this 1 hour candle, and you could have targeted like at least like 16, 17 pips, which is pretty good too. Okay, okay, and now I'm gonna show you what not to do, okay, because that doesn't mean that you're gonna be trading every candle you see, every formation of these three candles. Why? Because there are certain rules, as I said, okay, and one of them is that you don't want to trade against a zone. For example, in here, by the way, I changed this is the 15-minute time frame, but I'm gonna show you that they appear in every time frame, okay, as long as you do it correctly. For example, here we have the start of this. Basically, actually, price is like ranging. We have this upper zone here, okay, and what do we have here? We have this FTR, okay, price starting to go up. I mean, as you can see, like we are in a range, first of all, okay, price is not trending, so this would be like not an ideal FTR, and basically price is very close to this upper zone, okay, so you wouldn't have enough room for price to push up. Like you could have squeezed out like about 10 pips, but it was pretty risky, okay, you don't want to do that. And also you want to have strong bold candles, and as you can see, this is like a small candle, so there was like no indication of a strong momentum, okay. And as I was saying previously, FTRs create a zone, and as you can see in here, we had price making the FTR, okay, rejection of this zone, came back into the zone of the FTR, and look what happened. It started to go up, okay, and based on like confirmation, you could have taken this trade, and it went up about 50 pips or even more, okay. It's very reliable. In another video, I'm gonna be talking about that, like FTBs to FTRs, okay guys. So basically that's it, and let me know in the comments what you think, if you traded, if you want to know something more. Okay, I hope you liked it and you find this video valuable, and maybe it's gonna help in your trading. Okay, if you like the video, please thumbs up, okay, share, like, subscribe, and see you into the next one.